Edward Teather, senior economist of ASEAN region with UBS AG, joins us live from Singapore. Morning, Edward. Are you ready? Is my voice reaching you?
Yes, I can hear you. Thank you very much.
Hi.
Good morning.
Let's talk about the US GDP data. The US GDP data which came last night was not that impressive, even though the US economy continues to bump along the road. US equities are sitting at a record high. So who's getting it right? Who's getting it wrong?
Well, I think you've got to bear in mind, one, that first quarter GDP data was some way relating to a period that's now behind us. Moreover, a lot of the weakness in that Q1 GDP, according to UBS's US economics team, was due to lower inventories. Lower inventories in the past can mean higher activity in the future as firms try and rebuild those inventories.
What's the view then, Edward, when it comes to India, now that we have a new government in place? How long before growth can actually be revived back?
Well, by growth being revived, I assume you're talking about a return to very strong rates of growth north of 6%. Our feeling is that that's going to take time. There's a few things that reforms that the government needs to do which actually aren't going to be very helpful for growth in the very near term. The government really does need to get inflation under control. That means leaving interest rates high. It needs to bring the fiscal deficit in. That means that there's not a lot of room for fiscal stimulus, and also there are bad loans in the banking system that could act as a bit of a drag as well. So sorting these things out will take time. Once those are done, India has a huge growth potential going forwards if the right policies are put in place. But those steps that need to be taken first could still be a bit of a drag on growth.
Edward, what the NDA government or Narendra Modi government has inherited, they've inherited a weak Indian economy, investment cycle is broken down, there is little fiscal ammunition. So do you think the recovery in real economy is going to come with a huge lag effect? Nothing will change overnight.
Yeah, I think it's difficult to say that things are going to change overnight. What the Modi government can do to boost growth in the fullness of time is get inflation down. Getting inflation down is painful, but once it's reduced, that's a major plus, because high inflation has a corrosive effect on growth potential, because it adds static to the price signal and makes it more difficult for firms to make decisions or accurate decisions. So getting inflation down is one thing. The other thing is making the business environment more friendly, reducing bureaucracy, increasing efficiency. And those two things, when combined, should set the stage for stronger growth in the fullness of time. It's just that we can't expect this to kick in over the next 18 months in a really big way.
Edward, so how does one invest in this kind of an environment? For those who are investing in developed markets, they are not losing money. For those who are investing in important and big emerging markets like India, Indonesia and Taiwan, they also are, in a happy scenario, so to speak. So I guess currently, even though the Fed is committed to taper, equity as an asset class is not suffering. Why is that happening?
Well, I think they're both driven by the same thing. Equities are reacting to growth, and the Fed is reacting to growth, and as people get more faith in growth prospects going forwards, then that will mean both that people's faith in the investment environment, people's faith in company performance will improve, but also it will mean that the US Fed moves further down the route towards tapering its monetary stimulus.
Edward, we've got the Reserve Bank policy as well coming up on the 3rd. What does it seem like in a high, or rather I should say sticky inflation scenario? What do you think the central bank in India is going to do? Will it maintain a sort of dovish stance but leave the interest rates unchanged?
Well, the central bank has laid out a policy framework for us, and that policy framework is very much centred on getting inflation down. And that's very important, as we've discussed. I think the near-term target of getting inflation towards 8% by the start of 2015, from where we are now, is pretty achievable. The sort of ingredients you need to get inflation down, which is growth being below par, which is credit growth having slowed, already in place. So I think the Reserve Bank can just leave policy rates where they are and wait out, and that should and we should see inflation come down on that sort of 6 to 12 month horizon.
So what will drive asset prices in the short term? Real productivity gain, hope, or global liquidity?
Well, asset prices are always driven by sentiment, and India has an advantage here in that sentiment should, or the new government has an opportunity to improve sentiment by laying out a program of policies, of reforms that will make it easier for firms to go on and make profits and employ more people in India, and that will shore up the demand for spending ultimately. But it's the sentiment and the expectation of that happening or not that will drive sentiment and markets.
Edward, final question. According to Richard Sharma of Morgan Stanley, there is nothing special about India. In fact, according to him, if one looks at the historical performance of India, Indian markets pretty much have mapped what other emerging markets have done, plus minus 1%. So do you think, irrespective of a change in regime, on an aggregate basis, Indian markets will continue to map emerging markets and India will not be an outlier?
Well, it's a very interesting point. I mean, on one level, of course, India is not different to other economies. It's driven by the same incentive structures. People react to the same, policy stimuluses and try and work to better themselves in the same way that they do everywhere else in the world. Perhaps the difference that India has right now is that, especially when we look at the rest of Asia has been having a boom in the last few years. You've seen domestic demand has been strong. You've seen credit growth be strong. You've seen leverage rise, and that's been good while it's been taking place. India, on the other hand, has been seeing credit growth slow and growth slow. But there can come a time when those two positions reverse, and India is probably in a better position going forwards to enjoy a turn in the credit cycle, a turn in the growth cycle, than the rest of Asia is to see an acceleration from where it is right now. Now, that makes India a bit different. I'm not saying it's going to happen over the next 12 months, but certainly if the government puts the right policies in place, gets inflation down, it is something that can happen on an 18 to 24 month view.
All right, Edward, appreciate your time and thank you for joining us.